we've seen MFBs is really crazy. We've seen MFBs that intentionally wrecked like they disburse loans to their family members that they know were never coming back and were happy to sell the bank. Like, come and buy. Now, the new person who is buying is going to inject new capital to write off
Those
the,
loans.
the loans and then chase do recover what from where from
But then the danger of it is the new person that's buying the MFB license.
yes.
If the license is about to be retrieved by CBN, they have to, like they would have already paid that money, and then the burden is now on them.
That's where you can't give room to any form of negligence because
Yeah, due
due
diligence is
diligence is
very important.
critical. And there's no
Like,
way you want to complete that due diligence without trying to
yeah,
get an idea from somebody at CBN that, bro, so far,
how
please, I
far
beg,
this license? Yeah,
let me
yeah,
check
yeah.
this license, I beg.
Hello, everyone. Welcome to another episode of Teapot, the Pulse of Tech podcast, where we have insightful conversations about digital products, brands, and teams, as well as exploring the challenges in the tech industry. This is Lady Adeniyi, your host, and I'm excited to have you guys here again, watching us and listening to us speak. So, today we're going to talk about the fintech ecosystem, especially in Nigeria and Africa as a whole. Nigeria's fintech space has been highly celebrated as a major success story. However, beneath the hype, what are the biggest cracks most people don't see? We're going to talk about it. Also, investors have poured billions of dollars into African fintech, but now that funding is tightening up a little bit, what's the real state of many startups? What is the health check like? We're going to talk about that as well. And joining us today on this topic is O'Sheyi Ogunbanwo. O'Sheyi is a product manager and business executive with experience building fintech products within payments, lending, digital banking, international remittance, and agency banking. Oof, so much experience.
Ah,
Yeah, is ex Schlumberger, ex Voguepay, ex Kongapay, ex Carbon, ex VFD, and ex Fairmoney. So, O'Sheyi, welcome to the show. How are you doing?
thank you. Sometimes when you read stuff like that, man, it just like, is this real? Like, did all of that
Yeah.
happen? But yeah, thanks, man.
Yeah, apparently it did. It did. I mean, let's get right into it now. Like, introduce yourself, share your journey, and how you got to where you are today.
Okay, it's very, very, very simple. So, let's start in a very hilarious way. Let's say I had a father who was an engineer himself and used to work for Total, and I think all he wanted for his children was they must be engineers, and it felt like we were too young to be decision makers. So, let's summarize and just jump to the fact that yes, we just decided to read something that would lead us into the oil and gas space, and which we
Mm,
did, and that's how we ended up at Schlumberger, right? As an intern, graduate intern, and then Baker Hughes, while seconded to a Nigerian arm, Geoplex. So yeah, that was that phase. Let's just say I saw boys making moves. I saw men doing things. I saw them Lede and Co already killing it in tech, and I was like, man, this is my calling. And I think it was 2017. I thought the best way to go into tech was to just go and start up, like just be like them founders and have the title of founder of something. And so I think my exposure to tech started from workstation in VI. That was like the very first workstation, not that Maryland
oh,
one.
oh,
Yeah,
really?
yeah.
Nice.
So it was my exposure to like startup buzz, lots of founders, and yeah, and I decided, yeah, I want to do this. I didn't even know I wanted to be a product manager. I just knew that I wanted to be in tech somehow, some way, and I knew that I could not be a developer because I tried that stuff and I felt like, man, my brain, I don't know, the photons or ions or neons in my head could not take that stuff, right? So but yeah, we got into it. So we failed at it, and we just thought, you know what, let's go and get some experience. And yeah, that informed all the places I worked. So that journey to getting the experience is only intentionally driven so that we can go back again and try again, right? So and again, so keep it tuned. Shay is going to try again, and yeah, you can expect something way more. I don't know what to say. Way
Yeah,
more
awesome.
completed, way more awesome, way more amazing, way more anything. So
Yeah,
yeah,
you just keep on being amazing, you know,
that's it, bro.
trying again until you
Yes,
hit the
sir.
gold mine.
Yes,
That's
sir.
the right mindset.
Yes, sir.
So, yeah. So, I mean, we're talking about fintech, right? I feel like a lot of fintech scaled very quickly and they were very aggressive with customer acquisition. People would be thinking their products actually sustainable or just propped up by investor cash. What do you think?
Honestly, let's just say that statement is partially correct. There's the optics of it, though. There's the optics of the growth. Let us show the world that we're growing, or let the world perceive the growth, right? And there's some that grow by certain metrics, right? Vanity metrics, like some of us would like to call it, while there's some that truly grow. However, those guys that truly grow are very small. So yeah, that's how I would start it. That's really how I put it. So there's the perceived growth with absolutely no growth at all. There's the pseudo growth, which is some growth in some metrics, but not in the metrics that matter. And then those that actually do grow. So maybe I break it down in that way.
That makes sense. That makes a lot of sense. I mean, like you said, the optics are very important to get that investor cash. The optics are,
Oh yes,
you know, it's all about the optics. It's all about the
yes, bro.
story. A lot of founders, I personally myself have also realized that it's not really about the impacts, the customer acquisition sometimes. So yeah, I also find that to be true. But in your opinion, what percentage of fintech companies right now do you think are barely surviving on old funding rounds with no path to profitability?
In my opinion, man, it's about 80%. So
Whoa,
it's
80% is a lot.
it's about 80%. Yes, honestly, because and this is why I'm telling you that it's about 80%. There are, and this is not even from a position of optics. There are fintechs that are not all about the optics, right? That are doing such great job out there, and they're not even maybe shouting enough about it. And maybe that's because the founders of those companies didn't think they were building a fintech. All they just wanted was a profitable company. So again, I think everybody in lending would give kudos to. I don't know if I'm allowed to call names here, but maybe I'll try and not call names. But let me describe the thing. Like so, I'm 100% sure that maybe in early days when this company started, they didn't put the mentality of we're trying to build a fintech in their heads. The company I'm talking about is in Ikeja GRA,
Mm.
right? And this company is by far one of the most profitable lenders in the country. I don't want to give them the title of most profitable lenders because then they would maybe become something else. But they're by far one of the most profitable lenders, and they've been spilling profits for the last 11 years of their maybe 15 years existence, right? Now,
Mm.
the reality of this is maybe it's only today that they're now trying to be fintechy with the optics. In
Mm.
their tradition, maybe they've always been a fintech, right? But with the optics now, they're referring to themselves as also a fintech and whatnot. We don't know what the end goal is. But again, that's one company that you've not seen them in the news for Series A, Series B, Series C. You've not seen them
Mm.
in the news for the optics of we've disbursed X amount of loans and whatnot. They're not about that life. They've been there and they've been churning profit. I mean, I said churning profit. They've been spitting profit for the last, number of years. That's the dream of any lender today in the country. Now we can say yes, they're doing lending of some sort. They have a secured way. Well, that's fine. Somebody once told me in an argument when I said it that do am if easy, right? Like okay, they
Yeah.
did that. Okay, you two go and do it now. If you think it's that easy, go and do it as well. right? So again, there's that, and reality is there's those type of companies, right? There are MFBs that are doing quite well, but they also, I won't praise them because they're not doing very well promoting themselves. The reality is there are a whole lot more businesses that are doing very well, doing the exact same thing that fintechs are doing, but are not all about calling themselves fintechs. They have technology. They use technology as a channel to drive their numbers, but again, they go by what the license they have is called, right? So there's that. So if we sieve out these businesses and say, okay, you know what, we want to categorize fintechs as those that call themselves fintechs, and then say how many of them or what percentage of them are actually successful, like on the basis of they're not struggling and they're not living on investor funds, right? Yes, that is absolutely accurate. It's 20%.
I mean, so for people listening to this conversation now, you would be thinking, so what is the point of it all? Like, what is the point of all the craze? What's the point of all the hype, all the investor rounds if there is no path to profitability and they're just, barely surviving? Especially now that it's a little bit harder to get investor cash if you actually don't have traction and customers. What's your take on that?
If we're saying about 20% of the market have a path to profitability or are already profitable, there's a small portion as well that have almost no intentions or have no direct plans to be profitable. Right, I think profitability for them is secondary, and whether it's well informed or ill informed, the truth about it is that I think they're on a different journey. They're also on a different story, and maybe for some of them, they want profitability to be somebody else's problem in the future, right? But there's some businesses that truly are designed to drive impact. Recently, I became aware of a fund for it's driven by, I don't want to call the name of the promoters, but it's a $20 million fund to finance female-owned businesses, right? So they're trying to drive the ecosystem of female-owned businesses. They're trying to improve the number of female-owned businesses in Africa, and they have $20 million to finance, these businesses.
Yeah.
They plan to give single-digit interest rates to these businesses, right? And one of the questions I asked these guys was like, okay, that's fine, this is cool, single-digit interest rates, this is great. Realistically, though, with the ambitious target of about 8,000 businesses in Africa, so they want to disburse 8,000 times. Reality is, and this is specifically to rural areas. They're not even looking at female-owned businesses in urban areas, right? Rural areas. And I'd had to ask, okay, what's the acceptable NPL percentage that, And I could look at the guy's face that, well, we're not really tracking NPL, we're just tracking impact. At that point in my head, I was like, this is one of those typical scenarios where it's like, you know what? We're not all about that profit stuff. Because this is an impact fund. There's NGO work inside it alongside profitability. So maybe I'm 100% certain he told me 20% just to make it not look so bad. Like, okay, you know what? We could go with NPL of 20%, and I was like, okay, fine. There are businesses like this that they actually just want to track impact. Now, you've made impact in this person's business, right? Let's assume you've even made impact in the person's business. The way to track that would be that this person is now capable of repaying their loans and whatnot.
Yeah.
So, would there be scenarios where you've actually made impact, but this person, because of their unwillingness to pay back, they're now defaulting? Now, there are a lot of people, I can assure you, that have the means to pay back their loans, right? They have the cash flow, they have the margins and whatnot, but they're just unwilling, badly behaved people that choose not to pay back their loans. So at the end of the day, you're tracking impacts that, oh yes, we've made impact. This business is growing, this business is hiring more people, more women-owned businesses in Africa now because
Mm.
it wasn't just focused on Nigeria. They're targeting some other African countries. So, but then they're defaulting on their facility, even though it's really cheap, right? Single-digit
Mm.
interest rates per annum, right?
So that
Um,
was never the plan
it was
to
never the
repay
plan.
those loans. And
Exactly.
and to everyone listening, you mentioned NPL. That means non-performing loans, as per people
Correct.
that are not able to pay back their loans. So, in case people are wondering, so
Right.
that's
So
very interesting.
that's just one. So you can assume that there are businesses like this that are measuring something else. Now, we can't put them on the same pedestal as well. There's no path to profitability on how they're going about it. But again, they have their measure of impact. And for that, the investors who give them the money maybe are very satisfied with those
Yeah,
figures,
the impact.
right? While there are just some that are very good storytellers, right?
Mm.
Very, very good storytellers. I mean, multiple times I've asked myself questions of, wait, there's just so many. I mean, recently I was a lot of debates happening today in the country. Oh, there are people who are interested in getting a microfinance banking license because they're seeing money points, they're seeing OPay, they're seeing VFD, they're seeing Carbon, they're seeing all of these guys, Fairmoney, and they feel like Money Point unicorn status. Oh, you know what? But what are they doing? We can do it too. Now, guess
And
what?
the
I've
licenses are
actually
very expensive.
the licenses are very expensive because first there's a rally, there's everybody, every banker, and most of them are bankers. If you check, there are people who are working for First Bank, Access Bank, GTB guys as well. That Tosin, I knew Tosin when he was in InterSwitch.
Yeah.
And those guys, I know them. I know Benga now. I know Nonso. I know those guys, and they're doing it. I can do it too now. Now, guess what? Though, these guys will go. They would acquire a license, right? Okay. By the time you start speaking the grammar to them, that this is what Money Point is doing. This is what Benga is doing in VFD. This is what the guys at Kuda are doing. We should do it too. When time they now see maybe the cost implication, the culture implication of how things should be done and whatnot, then they come back with another story of you can see that's why they are not profitable. They reporting profits to just justify. I don't want to say to justify mediocrity or to
Mm.
justify their own understanding of how banking should be done or how a fintech should be
Yeah.
built, but then they start chasing a different metric. In between chasing lean startup versus a fintech in quotes that they want to drive that same valuation, they forget the path, and the path to profitability becomes more opaque,
Mm.
right? The visibility continues to dwindle over time. And then you find out, well, now there are MFBs on the market for sale, right?
Yeah.
I can tell you solemnly that I think I was checking on CBN website the other day. About 180 MFB licenses are currently active, right? Or have been issued, taking out the ones they've taken back. MFBs. Lady, if I asked you how many do you even know?
Not a lot.
Now,
Not a lot. Not
think
a
about
lot.
it. Even from the ones you might not know that. I mean, the credit to some guys. I can maybe for this one I will call some names. Credit to companies like Adosa, right? Adosa will not call itself a fintech, but I know Adosa has a microfinance bank, right? There are some other microfinance banks, Axion and whatnot. Now, these guys have, in some cases, been reporting profits, in some cases, not reporting profit. But reality is that they're keeping it real, they're keeping it going, right? Lapo is now is an MFB, right? By many standards, has been profitable for a long time. But reality is, okay, after those guys that we know now, we've seen Lapo's office in Maryland, we've seen VFD, we've seen Kuda, we've seen, okay, where are the other, what, 150?
108.
Let's even
Yeah.
say we take out 30, right? 150 other MFBs. But again, if you want to go and check it, would you call, so Unilag has a MFB, right? Babcock has an MFB. Covenant has an MFB,
Interesting. I didn't know
right?
that.
What's it called? Think of another university. They most likely have an MFB. University of Ibadan has an MFB. Uni Ilorin has an MFB. Now,
Interesting.
are they thinking about profitability with Babcock MFB or Covenant MFB?
Nah,
So again,
don't.
whatever metric they are tracking is where we should answer. But again, would Covenant MFB call itself a fintech? I don't know.
No.
Right. So
Yeah,
for
probably
those
not.
that brand themselves as
Yeah.
fintechs, that oh, I'm a fintech,
It's
some of them
definitely a
actually,
brand now.
yes, it's a
It's a
branding
branding
thing.
thing.
It's
It's
a
a
branding
branding
thing.
thing.
Oh, it's not.
Yeah.
They're not fintechs by action. So let's. There's a lot of filtering that needs to go on first. That oh, wait, are you really a fintech? You know, and so on. I mean, I used to work for a company that we used to call ourselves Trado. What was that term? There was a mixture of Trado. Is it Trado FinTech or something? It's because it's a very big mix between traditional banking and fintech type.
Interesting.
Oh yeah, Trado Digital Bank,
Try the digital bank. Very
right?
on the
Because
nose.
oh yeah, because
Yeah.
there's some very very traditional style where oh there's MCC, BCC, and stuff like that. There's not some logic trying to make lending decisions and whatnot. No, while there's the digital side of things, payments and whatnot and stuff like that. So again, to each his own. For those guys, yes, they'll still call themselves a fintech, but at the same time, by many metrics, I don't think everybody's even chasing profitability in the first place. So that's where we'll take it from.
Interesting. That's yeah. So my takeaway essentially is profitability is not always the goal for this company.
For a lot of
Sometimes it's
companies.
impact, sometimes it's market penetration, and sometimes it's something else that you just never know. I mean, it depends on the founders, depends on the investors. Maybe they just want data, maybe they're just experimenting. You just never know. So yeah, that
but
makes
but
sense.
but a lot of times it's outright. How do I put it now? It's outright madness for some more. You have some founders
100%.
that they're buying houses in Newcastle, buying houses in Peckham, buying
Mm-hmm.
houses in Banana, but the license is about to be retrieved by CBN
Mm-hmm.
or has already been retrieved by CBN. I mean, I won't call
I mean,
names,
they
but
can just resell the license to someone else that wants to start an MFP.
well, true that. Not no, we're even talking
But
in the
then,
fintech space in general. Not even MFBs now,
yeah,
right?
yeah,
I mean, we've seen MFBs is really crazy. We've seen MFBs that intentionally wrecked like they disbursed loans to their family members that they know were never coming back and were happy to sell the bank. Like, come and buy. Now, the new person who is buying is going to inject new capital to write off
those
the,
loans.
the loans and then recover what from where from
But then the danger of it is the new person that's buying the MFB license.
yes.
If the license is about to be retrieved by CBN, they have like they would have already paid that money, and then the burden is now on them.
So that's where you can't how do I put it now? That's where you can't give room to any form of negligence because
Yeah, due
due
diligence is
diligence is
very important.
critical, and there's no
Like,
way you want to complete that due diligence without trying to
yeah,
get an idea from somebody at CBN that bro, so far,
how
please, I
far
beg,
this license? Yeah,
let me
yeah,
check
yeah.
this license, I beg,
Yeah,
you know
because
that type of thing.
I know about an experience. I'm not going to mention the company's name. They were going to buy an MFB license because they wanted to start a bank themselves. And the license that they were going to buy, the deal was about to go through just for them to sign on the dotted lines. And the CEO stalled for like 2 weeks. And the news eventually came out that that license was being retrieved or was being revoked. So imagine
You
if they
should
had,
you should think
gone through that.
his mother's prayers are on point, man.
He said he doesn't know why he stalled, but he just decided to stall for like 2 weeks. It's crazy. It's crazy. Like anything can happen.
It's this country, anyways. But it's not even
Anything
this
can
country.
happen.
Similar
It's
things are happening in
everywhere. It's
Ghana.
everywhere.
Similar things are happening in Ghana with some acquisitions that, if less, I mean, it's wild west in this fintech matter.
It's
But
everywhere.
what I'm
Everyone is
even trying
chasing
to
that
say,
bag.
is there are many angles to profitability, right? There's some people that want to be profitable, but honestly, with their license, the license that they hold, they can never be profitable. Like you can say maybe Shay doesn't know what he's talking about, but for me, in my small sense, in the small I've seen, I don't know how that license category would ever be profitable. I can give examples for this.
Yeah, please do.
For people holding PTSP license today, you have a PIT, right?
What's a
How
PTSP
on
license?
So a PTSP license is a license for offline processing. You can provide POS devices and connect to a switch.
Okay.
Offline processing, POSs, what's it called? POSs. I think it also includes ATMs as well. But offline processing. PSSP is for online processing. So I'm just
Yeah.
trying to get I think PTSP is Payment Terminal Service Provider, right? So payment terminal is of course a POS machine, as the case may be.
Yeah.
Um, there's a license category for that. Now, guess what? People holding a switching license can also carry out PTSP activities,
PTSP. Yeah. Yeah.
right? In reality, today, PTSPs of old, they used to, ride on banks. Like, banks have to use a PTSP
Yeah.
to distribute and whatnot, right? Even initially, fintechs too will partner with PTSPs and give out POS devices and whatnot. But today, the market itself has even shifted away such that it makes absolutely no sense at all to have a PTSP license. Now, let's not go into the margins of how much PTSPs make per transaction because your journey to profitability, I don't know who you would explain it to. Today, you can't even point to one PTSP that, oh, this PTSP is on the path to profitability because the path does not exist. You know how, if I make let me make a Dune reference. You know how, I don't know if you've seen Dune.
Yeah. I
Um,
have.
Okay, so where Rizal Gaib, or I'm trying to just be funny. It says, "Oh, I see a narrow path." But there is no narrow path. There's no way. There's no projection. There's no budgeting. There's no person from McKinsey that can help you solve your problem. Like employ PwC, McKinsey, add KPMG to it. There's
Do all
absolutely
the
no way,
analysis you can do, all the
bros, bros,
market
bros, bros,
analysis,
bros,
nothing.
bros. There is no way. I mean, I've sat with MDs of two different PTSPs, right? And they understand this. In their attempt to be profitable, they've now said, oh, you know what? Since the market is shifting, let's try and upgrade our license and get a PSS license. Now, a PSS license combines the PTSP license and the PSSP license, which allows them to process online transactions, and also the super agent license, which is they can now do agency banking. The reality of it is it's already so late for them that they can't even make a mark in the market today. And this is also because the commercial banks are unwilling to buy devices or finance POS devices. So I think it's a dead license.
That's interesting, man. I mean,
We
you've
can
even
keep going.
answered.
There are more. Oh, I've answered future questions, have you?
Yeah, yeah, yeah. Like you've answered the question I was going to ask next. So I was really going to ask, like, what fintech business models have you seen that is going to fail in Nigeria? And
The,
it could be like business model, or what kind of projects or what kind of products model or feature have you seen that you don't think is
Okay,
going to be
so
sustainable?
so already you know that
Yeah.
Davlin, you come into this fintech space and say, "Oh, I want to get a PTSP license." You're just joking. Like it's a joke. It's a very very it's a very very big joke. If you can achieve it with partnerships, just be going home. Just don't even bother. That's one. Because I mean, I think I'm aware of I was a popular fintech, a big digital bank that was considering getting a PTSP license because some exec had thought about it as a good idea that, oh, we should get a PTSP license. But the reality is, why? Like there was absolutely no need to get a PTSP license, right? And the other license category that I just think it's an absolute joke. CBN should either scrap it entirely or restructure the permissible purposes for that license category, which is the MMO license, mobile money operator license. It is too expensive. It's not a cheap license. MFB, MFB, 150 million, 50 million, you're good. You start at tier one or tier two, right? You're ready, you can get your license with that's the what's it called? Paid up capital that you require. For an MMO license, you require about 2 billion, if I'm not wrong. 2 billion naira.
Really?
So it's not a cheap license in the first place. So who in their sane mind today should be holding an MMO license if you are not OPay? Because first, OPay is still happily using their MMO license category. But the truth about it is, you go just move a little bit from OPay's landing page and move to the middle button, the finance button. You'll see it up there, Blue Ridge, some microfinance bank, Blue Ridge Microfinance Bank that they're also riding on. Reality is, I'm sure if OPay was just entering the market now, they most likely would not acquire a mobile money operator's license. The early mobile money operators that we also knew were Paga and the likes, but God, heaven knows what those guys at Paga are really doing right now, if not trying to sell gift cards to God knows who. But let's not go into that's topic for another day.
Yeah. I don't know. For some reason, Nigerians just will not adopt Momo.
Okay, so that's Momo. You're referring to Momo different. MTN. No, Momo is a different product. Momo is in other countries an actual MMO, right?
Yeah.
It's actual mobile
that's
money.
What I'm. Yeah, that's what I'm talking about.
Okay. So, but Momo is MTN's own PSB. It's a payment service bank.
I think MTN just took that word and branded it as their
own. Oh yes, they did.
I'm talking about in other African countries, the mobile money is
it's a big deal.
But in Nigeria, Nigerians are just not interested in that.
Yeah, because we're a different economy, really. Because our commercial banks, we should clap for our commercial banks, or we should clap for our regulator and the banking system that was properly structured. Those other African countries didn't have that. It took a telco to help them do that.
You're very right.
Zenith Bank and GTB and Access, they're not mates of banks in Kenya or banks in Ghana or the Nigerian banks are going there and like doing big stuff. Yeah. So we're not even on that scale. So a Nigerian guy, a typical guy like me or a random guy on the streets has so much respect and regard for a Nigerian bank. They look at you as mobile money. You're small. I don't want to bank with a small guy. I want to bank with where the big boys are banking, right? And they look up to the commercial bank. So again, that's a cultural thing that has now become, it's not going anywhere anytime soon. It's become a part of every fabric of our being. But the reality is, why would you need a mobile money operator's license today in Nigeria? There's absolutely no reason. I'd like to hear other arguments on this.
I don't see a reason either.
Because initially, the selling point was the phone number could be the account number, and you could, but guess what? It's either CBN is sleeping on something or the license category is just a joke. And why did I say that? The truth about it is, if you're saying that, that was the critical selling point, that customers could onboard with their phone numbers and their account numbers everybody is doing this right now. Like
banking the
people,
unbanked.
let's even do that. See, let's do
That's
that.
the slogan.
If we go into that one, we might not leave this podcast anytime soon. Maybe we should do a part 2. Maybe we should actually do a part 2 for everybody who has it as part of their charter to say we're trying to bank them. I would, anyways. But let's not do that. Let's not do that right now. But reality is, okay, OPay truly has a MMO license, right? We can confirm that. So in all their rights, it is okay for them to have phone numbers as account numbers. They have the license to do that. But MoneyPoint, do you have MMO license? I don't know that you do. But I know that my phone number can be my, my account number on my MoneyPoint app. GTB, I don't know if GTB has an MMO license, but I know that if you have my phone number, you can send money to my GT Bank account. right? And a lot more people are adopting this. Like, I mean, there's a long list of people who are now have this on their products. So if regular microfinance banks have this as a feature right now, what's the selling point of a 2 billion naira license? Please, if you have 2 billion that you want to use to buy MMO, just give me. I have what I can, I will give you returns. I will pay you 30% interest rates. Just they come and deposit it with me. I will pay you 30%, come back after a year instead of doing MMO with it. And that's the real thing. Let's not now talk about the path to profitability for payment service banks. Oh. Those guys are on another cruise on their own. They're just like, oh, we're a payment service bank. My name is Hope PSB. My name is Momo PSB. Oh, I call me Smart Cash. But bruh, let's not the path. I don't want to say their own path does not even exist, but it exists. But you need to discover it like oil. You need to discover the path to profitability for those guys because the path isn't laid out for any of them. They're just on long cruise right now. I don't know. I mean, but to tell you that those guys are going to be sustainable anytime soon, they need to do something drastic. So, I mean, in my opinion, those are three license categories that should like somebody needs to come out and just get it, figure it out. Maybe for PSB guys, they have a chance. Maybe if they involve PwC and McKinsey to help them, maybe they would discover theirs. But you see those guys on the PTSP rail and what's it called, the MMO rail, bro. I don't know who will save them. I really don't know. I really don't
Oh my
know.
god.
Because I actually know
Yeah.
a mobile money operator that actually that had an engagement with McKinsey in 2021 with all the plenty grammar that now, consultant way, oh, fantastic slides, nice jazzy presentation and recommendations and whatnot. 20 by 2025 now, nothing.
Man, that was very insightful. So I'm going to ask, there's the issue of the fintech space being overcrowded, like an overcrowded market.
Mhm.
Like every two business days, there's a new fintech popping
So
up.
major rally.
Whether it's an MFB or whether they have all these other licenses or whether they are just, riding on other partnerships. Right.
Right.
So there's a major rally. We've seen brands like Opay, MoneyPoint, and PalmPay, even Pockets dominates with aggressive marketing. Do you think there's room for smaller and newer fintechs to come in and get a piece of the pie? Or what do you think?
I think it's one of those scenarios of never say never. Do I think smaller fintechs can get a piece of the pie? Of course, but maybe a very small piece. Right? Yes, certainly they can. I don't think there is a limit to innovation. I don't think we're at the end of innovating in the fintech space. I just think a lot of people need to experiment a little more or be a little more I don't want to use innovative anymore, but I would say a little more intentional about the products they're building, right? I feel like today people would just come up with, oh, we're trying to bank the unbanked, or we're trying to bring financial inclusion to the underbanked, even. Like, I feel like
Sure.
those guys are. I don't want to say jokers, but I just want to say they're just people who want to join the rally with no real plan or intentions on how to make it work. I strongly believe that newer fintechs can come into this space and make a difference. However, it's not going to be fintechs based on vibes because there are a lot of fintechs that are just trying to like let it just be that, oh, I have a startup back in Nigeria. I would tell you about one. There's a fintech demo day I attended, and I just had to. I mean, I had to support because my guy is one of the promoters. Building with them, but I guess maybe he's just trying to collect the founders' money or something. I don't know. Let me not talk. But the reality of that demo day was these guys claimed, oh yes, we're a fintech, we call ourselves X, but what we're trying to do now is to create a payment ecosystem, right? With the scan to pay products. So we have no intentions to connect to NIP. We want to make transactions happen within our own ecosystem. So what we're trying to do now is first you can do inflows, so you can fund your wallet, but to do outflows, you need to do scan to pay. And for you to pay for stuff, we're going to be integrating with a lot of merchants. So it would only be at our merchants points you can scan to pay. In my head, I was like, Chai, who gave this bros this fantastic fintech idea now? Now, where I just died during the demo was when they said we're trying to bank the unbanked. And I thought about it again. I said, banked. Eh, you don't even have a license. Like there's no CBN license. So I'm wondering, okay, so what are you exactly? Are you a digital bank or are you a PTS? I mean, where exactly are you playing? So that I understand. You have no options for bill payments or nothing on the platform. You're doing scan to pay. So for me to transfer money to somebody, I'll have to first tell the person download the app. Okay, and let me scan your. Oh my! Well, and then I had to tell my guy that, bro, people are innovating around trying to complete payments in less than 30 seconds. You're taking us back to 5 minutes to complete a payment. Like, bruh, to cap it off, the UX gradients everywhere. Like, just see, I couldn't even. I was like, you know what? You know how we end our conversations, which is, you know what? You could prove us wrong. We don't know it all, though. So you could be the differentiator that
Yeah.
we're looking at.
Yeah.
So just
Yeah.
keep it up. That's fine. Don't listen to what I just said, but I mean, so and that's how the story ended, though. But bruh, in my mind of minds, I'm like, this is another this is another story of banking the unbanked. They have a fancy office in Ikoyi, banking the unbanked out of Ikoyi, like and stuff. And I'm like, okay, oh wow, no,
No wahala.
no, wow. This has become overbanking the bank itself. Like,
Yeah,
but
overbanking the actual banks, before thinking of banking the unbanked.
back, bruh, because in my head I'm like, take this thing to Kano, Kaduna, or even Ibadan here. You're telling somebody that they need to scan somebody else's QR code before you can
Yeah,
transfer.
yeah.
In my
The
so
QR
even
code thing is also a bit, the speed aspect of it is it's
ah,
shaky,
bros,
right?
let's not even talk about this thing here. Plus,
Nah,
plus, guess what though? So to answer the question of, well, how does somebody else transfer funds to you? Do you have to always see the person physically? Guess what they did? They said, "Oh no, you can send the QR code to somebody on WhatsApp." Or I was like, "Okay,
how will you
let's."
scan it?
God bless you, my brother. So what are you telling me to do? I need to go and get another phone to
No, no,
scan.
no. Print the
Oh,
QR code. Send it to a printer.
print the QR code. Then I just thought about,
Yeah.
well, maybe because I'm tech savvy, I could do Google Lens and get it over with. Abi?
Mm.
But my brother, how many people
How
even
many
know
people know
Google
that?
Lens?
Yeah,
Like, how many people that I use an iPhone, all right, and I still use
yeah.
Google Lens, right? But bruh, even people that use Android don't know the
They don't
functionalities.
know. They don't know.
So
I
how
think
are
people need
you?
to stop forcing. People need to stop forcing ideas through. Right. The idea of this QR code payment. I'm not saying it's a bad business model. It works very well in China, and
And
they try to say, "Oh, because it works in China,
it works in
we bring it.
India.
It works in
Why not?
India.
Why can't
Why
it?
not? Why
Oh,
can't it work in Nigeria, right?" There's a lot of unlearning and relearning that the customers have to do, and an economy like Nigeria, customers just don't have that time to
bro,
learn new things like that.
let me even add this. Maybe I would have been more tolerable if it was some Indian guy that was pushing this agenda. Baba,
Yeah,
Niger boys that are pushing this agenda. It's not a Nigerian guy based out of India.
yeah,
Niger boys. In my head, I was like, nah, man,
yeah. I
nah,
mean,
man.
again, I'm not saying in the future it won't work,
Oh
but
yeah,
it's an uphill battle, right?
yep.
And we talk about innovation a lot. Sometimes we want to force ourselves to innovate even when we don't need to, right?
Yep.
And sometimes we want to innovate because it sounds cool for us to go to tech conferences and talk about the problems that we are solving,
Hmm.
even though the problem is not going to get traction. But like you said, in the beginning of this podcast, sometimes the goal is not profitability. Sometimes you
True.
want to see how much impact you can make, whether
True.
it's small, whether it's big, whether it's an
True.
experiment. So you just never know, right?
Yeah.
But yeah, it's a very interesting market, but there's
It
definitely
is.
room for other people to come in and still get a piece of the pie, even if it's a small, you
I,
know.
I
But
definitely agree. And the other reality is, I think founders haven't really gotten a way to actually measure the size of the problem they're trying to solve, or they
um,
ignore, or they ignore that metric and decide to just sell their agenda regardless.
I think sometimes they do. They ignore it.
I think they just do. They do. Yeah, it's just like I've also seen, bruh. I've seen guys in that work in unicorns today, right? That are also so elitist in their thoughts. Like they're not the actual innovators or the founders, but elitist to the sense that I don't want to. I'm tempted to call the company name for this one, but let's not do that. It's just a
Don't
company.
worry, I can relate. I totally understand, and
So
I'll buttress the
i-
point after you.
imagine product managers in certain unicorn companies that feel like, oh well, I'm just building this product for um, Nigerians in diaspora that come home for what's it called, for Dirty December, or for summer holidays, and that's all he's building for. And by the time I'm going to engage this guy further, it's like, you know what? How many exactly are these people that travel back year on year? Let's even say, I don't know, what would be a good number? 10,000 people for Dirty December. I don't know. Would that be a small number? Should we say
I think it should be
100,000?
small. Yeah, let's say like 100,000,
Okay,
two
so let's
hundred
say
thousand.
100,000 people travel back home for Niger, to Niger for Dirty December, and that's who you're building for. Do you think that's a big enough size to justify your product? Now, it's not just a feature in the product, it is the whole essence of your
The
product.
entire product. So the product is only useful 1 month in a year,
In a year.
essentially.
For in fact, if you stream, people that travel would most likely not come at the 1st of December, right? Maybe a few
Yeah,
guys would have started
definitely.
entering from the first, but you can expect that majority schools on holidays from the 12th. So
Yeah.
from the second week of December, flights are all coming back to Nigeria, right? So if you look at it really, maybe it's 2 weeks of this
Yeah.
entire thing that you're building for. And you're so defensive, like, bruh. In my head, I'm like, okay, now, no wahala. Yeah, well, it might work, or maybe Nigerians would also find a way to use this solution
Mm,
and so on
mm,
and so forth at the end of the day, sha. But the elitist thoughts that came into play, even while the build was going on, is such a. So at the end of the day, when it now becomes the question of how are you going to make it profitable, you now start coming up with new ideas. So profitability now becomes a secondary thought after you've
yeah.
built what was just in your mind. So you've ignored the size. So maybe that's a typical scenario of you actually knew the size of the problem, but you just chose to ignore
You
it.
just
Like,
you
you know
just
what,
just ignore
it's,
it.
it's, it's big enough. It's big enough. I'm still going to build this thing. I don't have anything else to build.
Yeah. So just to fulfill your own ego, right? And I wanted to also buttress that point in the elitist views. Some people live in bubbles, right? And it's very dangerous for founders and especially product managers that are trusted within companies, or like VP of product, CPO. It's very dangerous for those people that I just mentioned to live in a bubble. So imagine you have this guy, he's well to do, he's rich, is like the CEO or the chief product officer or like the VP of products in a fintech. He's rich, he's well to do, he lives in Ikoyi, he drives
Yeah.
a Lambo, drives a G-Wagon, and that's the person that's telling you that he wants to bank the unbanked, which is fine. It is fine, right?
Right.
But when you speak to the person lives in a bubble. They're like, oh,
Mm-hmm.
this, they the bubble is so thick that they believe that everybody else is living like them. So when they are building the products, they are building the products in such a way that they would enjoy using it.
Yep.
But then the goal of your company is to bank the unbanked, right? The unbanked people, they don't live in Ikoyi, right?
Nope.
They don't drive G wagons. All these things are very dangerous. So you always need to have objective people in your team, people that can
Yep.
do research, people that have ties to the ground, if that is the goal of your company, right? But you find that most of the time there's this elitist mindset in the fintech world, oh, we want to be out. They want to tell a story, get the investor money,
Yep.
and then talk about the cool stuff like banking the unbanked. I feel like I've heard that banking the unbanked so many times. I'm tired of hearing it, but
Bro, I said
it's
we need to do a
crazy.
whole podcast and call it banking the unbanked. Then we would. You need to for that podcast. Then we need to get somebody that is a pro, is on the team of banking the unbanked. This was me. Then you
And then
just sit
let's
down
talk
and
about
watch.
it.
You just sit down and watch if we will not bring out bottle and break each other's heads. Honestly, see, let me tell you about a survey I did sometime, not last year, 2023. A survey I did, bro. I did. So I stay somewhere around Lekki, right? And I just did two streets, random yarns of, oh, you know what? I'm just outside. Let me randomly talk to people. Coincidentally, my wife is from the north, and I did the same thing in an area in the north as well.
Nice.
Now, guess what I did in the survey? Just random, nothing too technical, nothing too. It was just randomly asking security men in my area what bank they use, right? So the first story of Nigerian banking the unbanked for those our Ikoyi founders are my gateman, my cook, now, the people, the
Yeah,
auxiliary
yeah,
workers and
yeah.
whatnot, my mechanic. Bruh,
The
first, let me not even say,
nannies, the house cleaners,
let me not say any mechanic in Lagos, because mechanics in Lagos are big boys.
they are
Those
big
ones
boys.
are not
Forget
even,
those
they
ones.
are
Forget
not,
those
they're on
ones.
another level. So let's not even go there. Let's talk about what I found. Reality is, I think I spoke to about, on the two streets, I spoke to about 30, no, about 31 people, roughly about 30 people in total. So they were actual security men and they were just bystanders who were working on some property or whatnot, right? And I asked them what bank they use. Guess what? Yes,
Ope.
majority of these guys have OPay. That's the truth, right?
Mm.
But reality is, OPay was not there in any of the cases. In all the 31 plus people I spoke with, none of them had OPay as their very first account. None. Absolutely none.
Mm.
UBA, FCMB, UBA, First Bank, those were
So they are properly
they were
banked.
first banks first. Bruh. Now, not a case of, this is not a case of, well, I initially do not have an account, but because I could not create a BVN on OPay, I had to go to
Mm.
an FCMB branch first to create my BVN, and hence I had a FCMB account. This is not one of those, because I categorically had to ask, when did you open this FCMB account? A lot of them will say one of their friends or one woman approached them, that they don't have, most likely a DSA, so a direct sales agent that
Yeah.
goes out in the field and
They
says, "Oh, I
go
need
out,
to meet
they are very
targets. I need to
aggressive.
open accounts."
Very
Exactly,
aggressive.
and that's how they opened their accounts. Did BVN capturing and whatnot, and they got their accounts, right. Good start. Maybe those are the true people banking the unbanked, right. Um,
Fact,
and
actually.
the guy has this FCMB mobile app. Some have the UBA mobile app. They have the I think it was only maybe about five guys didn't have Android phones. And it's not like they've never had Android phones before.
They
It was
probably
just, oh,
sports.
my phone is bad, that kind of thing. Yeah.
Yeah, yeah.
One even showed me the Android phone that is bad. That I was like, okay, you know what? Let me help you fix your Android phone, right? But truth is, these guys have Android phones. Majority of them have Android phones, right? My gate man is constantly, I don't know what, maybe some Bitcoin mining thing. I don't even know what that thing is. They always tapping it like this. I don't know if you know what I'm talking about. They're tapping the screen like they're going to get money out of it.
I have no
And
idea.
you've never seen that thing before?
I have
Oh,
no
he's
idea.
always doing that stuff. But guess what? They all have smartphones, right? They all have Android phones. And the guy has, they most likely have their UBA accounts and whatnot. And of course, now all of them have OP accounts. All. Like the one that does not have OP, I think is maybe one guy and he had Pound Pay, right? Now, the reality of this thing I found, same thing in Kaduna, right? Exact same scenario in Kaduna. Now, for the few guys that I found in the north that had no accounts, those ones, I put them in the category of can never be banked because I needed my wife to help me interpret to them. Like they could not speak any English. So maybe the day Chijioke and Ngozi in Carbon decide that I would create a Hausa version of my Carbon app, I will build in Hausa or build in Igbo or build in Yoruba that maybe we can bank those guys. But in my opinion, that guy can never, because he's never been to the four walls of a school, doesn't see the need for a bank. If I needed to send him money, he says I should send it to his brother. Like his brother has an account. So I should send it to his brother or I should give him cash. So I don't know if you will force him to bank him. I don't know if you understand what I'm saying. But again, that was the reality of my finding, right? So by the time our Eco founders now go with the idea of we're trying to bank your bank and they start calling, oh, my cook, my cleaner, my I'm like, these guys are just joking. Like it's just a joke. However, the more intelligent ones, maybe the VI co-founders, have now said, oh, you know what? It is banking the underbank, right? So these guys are banked. They have an FCMB account, but would FCMB give them a loan? No, they will not. So I will give them a loan. So I am banking the underbanked, and that's a more intelligent approach to it. So, bros, let's not go into this matter of banking. Like I told you, we have to do a separate thing for that.
Man, that's amazing. Banking the underbanked makes a lot of sense. So you're thinking of innovative ways to improve the experience of the people in the lower income brackets
Bracket,
because
correct.
these people are already banked anyway. So saying banking the unbanked is just it's ridiculous at this point. And what you said is really valid, unless you are willing to make your app multilingual. And even if it's multilingual, the people using it, do they even have interest in
Yeah,
using a mobile app? Do they have interest in using technology at all? Stuff like that is what you should consider or what people should consider. But anyway, let's see. I don't know if I should ask rapid fire questions because like 1 hour,
go
20
ahead.
minutes.
No, it's fine. It's fine. You
Yeah.
enjoy it.
So let's do. Yeah. So let's do some rapid fire questions. All right. So I'm going to ask you iPhone or Android? Which one do you prefer?
Which one do I prefer?
Mm-hmm.
It would be ironic. I would say Android. I use an iPhone, but I'll say Android. In
Oh,
one
really?
particular, yeah, for Google Pixel, really. Let's say I'm bound because of my wife to just keep using the iPhone. I dare not use an Android phone, but yeah, the Nothing phone, Google Pixel, and Samsung are really great phones.
Yeah, I really like what Nothing is doing.
Yeah, yeah, it's
But to
really
be
great.
honest, because of my wife as well, if
I
not
don't
because
believe
of the
you.
strong head that I have, I'm still using Android. I'm like, no, I'm not switching to iPhone. I'm still using
Or
my Android.
some of
I
us,
don't
we dey
I don't know if I eventually would switch, but nah, I'm still using my Android. I enjoy
Android.
it.
Which
Yeah.
Android are you using?
S23 Ultra.
Okay.
Yeah. Very good
The
phone.
Google Pixel is such an amazing phone. I
Yeah,
crave it a lot. But
yeah,
man, I close my eyes, or I still have to be on this iPhone 16 matter. But anyways,
yeah, yeah.
we'll
Always.
break. I'll come for you. I'll come to you for manual. Like I'll come to you to understand how to break the yoke.
Yes, we'll talk about it offline. Yeah.
Yeah.
Okay. Are you a cat or a dog person, or no pets at all?
Dog person. Definitely dog person.
Nice, nice, nice. Coffee or tea?
Tea.
Nice.
Anxiety will kill me if I took coffee. Yeah, actually, for both of them, but coffee, tea is less,
Tea is,
and there are
yeah,
different
less
types of teas.
caffeine.
Yeah,
So, are you a morning or a night person?
night person definitely.
Oh yeah. What time do you comfortably get out of bed in the morning? Like if you're not going to work or if you don't have early morning work?
My body clock is set for 7 a.m. So, but I'll just say comfortably 8 o'clock.
Yeah, same. Same. 8, 8:30
Yeah.
if I don't have anywhere else to be here. Okay, so let me ask you the final question. If you are launching a fintech startup today, what kind of problem do you think you would solve, and what would you do differently knowing what you know now?
Well, maybe this is a premonition of the future.
Yes, premonition time.
Right. So, in my if a fintech product would be, it will still be built around credit, and it would be an attempt to building a bank agnostic product, right? And it will be a product designed for rent, but also designed around income earners, right? My argument for that in the future is every income earner, as long as you earn an income, either it's a salary or you have a business that does very good margins. The reality is that you should have all the access to financial services. All financial services that exist should be at your beck and call, right? So I really want to pamper income earners. So either it's with credit, either it's with access to good homes, and so on and so forth. Everybody knows the status of Nigeria's mortgage market. It's almost as good as dead, right? Except for those that can access NHF, right?
Yeah.
So the reality of this is, I'd like to build a product around, solving for the hassle that income earners have to deal with when looking for good homes to rent, but at the same time backing it up with credit. So more like building an HMO for rent, if you get what I'm saying. Yeah, that's actually surprisingly or interestingly maybe a work in progress already.
Maybe.
Maybe. But yeah, I think people, I think the market doesn't really need another fintech per se. I think we should allow this open banking revolution to take place, or should I say the embedded finance conversation. It's time for it to take full effect. By 2030, we should have hit that mark. The next wave should be embedded finance. It shouldn't be any new. I don't think Nigeria needs another new fintech. I don't think so. What I think the market needs right now is more embedded solutions. So we need to see more child decks, right? We need to see more bank agnostic products. I think we've forgotten how to build those. So we just thought, you know what, being the financier or being the fintech is the better part of it. Nobody wants to do the hard work anymore, right? Nobody wants to chase
Mm,
for actual customers. They want to be the one processing. Oh, you know what? You become a merchant. Don't worry. We would process for you. And we have all assumed that that's the easy way out of things. But I think the hard way needs to prevail now, which is more bank agnostic products to should come. I really think Jumia and Konga should rethink their user experiences first. They most likely don't even have to do anything any more than rebuilding their user experiences, because the era of bank agnostic products started from them, if you recall, with the e-commerce
yeah.
brands. And all of a sudden, they forgot they were technology companies, and I don't know what they. I think Jumia started doing advertisements and logistics and whatnot, and Konga thought they were just distributors for major brands and whatnot, and forgot that technology was the key thing,
Yeah.
and also started chasing fintech. So got distraction. But again, that's what I think, right? More embedded finance should be seen, instead of all the fintechy things, right? So yeah, that's my it. Before I go and give my closing remark.
All right. So, closing out this episode, where can people reach out to you if they want to, learn more or just chat?
I'm on LinkedIn. It's my full name, Oluwaseyi Ogunbanwo, or just do linkedin.com/oluwaseyi.ogunbanwo.
Okay.
Um, my Instagram handle is Obanwo O'Shea, and it's the same on X. Well, I don't know how, I don't know if, but let's just say Twitter. It's the same it's the same handle. So it's Obanwo O'Shea. So it's spelled as OBANWOOSHEYI. So that's, I respond to DMs, I respond to everything. So
All
I'm not on
right.
Facebook. I'm not
Awesome.
on TikTok. So
All right. Awesome. 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 So, is there anything you're working on right now that you like to put out there, or any shameless plugs that you like people to know about?
yes, I think I already spilled the tea on the rent product. But interestingly, I'm trying to, should I say, launch another product that's very similar to Carbon Zero, right?
Similar to what?
Carbon Zero.
Carbon Zero.
Yeah. So where customers have a pre-approved limit, and then it's almost as good as zero interest, but there's a fee that's
Okay.
charged
I
at
get.
the. Yeah, so the product is targeted at bringing in northern customers into the fold, as well as faith-based lend borrowers. The other product is similar to Carbon Zero, but it's a deposit product as well, which is for upfront interest payments. So traditional banking would naturally reduce how much you'd earn if you were taking the interest upfront. But I'm trying to make this popular now, and also not give the sense that anything is being reduced, but just more value for your money, bringing in your deposits as well. So yeah, those are two products I'm working on and really excited about. We'll see how it goes.
That sounds amazing, to be honest. But yeah, Sheyi, thank you so much for coming on this episode, man. And to the audience, thank you guys. Thank you guys so much for listening to the end. This has been amazing. They've told me to be telling you guys to subscribe. So like and
Like,
subscribe.
share, and
Like,
subscribe.
share, and subscribe. Thank you very much. And stay tuned for more episodes in the future. All right. Peace. Bye.